Is this going to be warmed over leftovers from last week, or can he actually add something new?
No, I think it's going to be more of the same. I mean, they have provided so much additional stimulus to the economy on the monetary side since March 23rd. That's when they adopted QE forever. I suggested that the way to look at it was they decided to, the heck with the bazookas, let's go for the B-52 bombers. They didn't even bother with helicopter money. And then on top of all that, they've told us that they're going to keep interest rates near zero through 2023. So I don't know that there's much more you can do.
Brent, how about, I guess, crying to Congress to do their part, I guess, as he will ostensibly argue? Is there any more urgency in that argument, given what some of the case data has said in recent days, and certainly some of the cautionary tales that we're getting from Europe?
Yeah, I suppose that if the cases do continue to rise and the data does fall, that perhaps you may see some more urgency within the fiscal stimulus. And I do think it's important that you point out that the Federal Reserve does now talk about politics. They do talk about fiscal policy. That's quite a shift, along with their many other shifts in the past few years. And so if you think about it, 40 years ago, we had the Volcker-led Fed that emphasized keeping inflation at bay and moral hazard at bay, kind of along the lines of what Ed said. And now you have the Yellen-Powell blueprint, which essentially emphasizes enhancing inflation and letting the economy and, importantly, the markets run hot. And so I think that is still a big backdrop, and that is still something that's out there as a put for the market and for investors to think about as they contemplate the next few weeks and months.
You know, Ed, this is Seema. One question that comes up, Morgan Stanley's Mike Wilson, typically very bullish, put out a note today that he's expecting a deeper reversal in technology. You've been in the camp that it's time to broaden one's portfolio to other cyclical growth sectors, even energy, which offers a higher dividend yield than the S&P 500. Is that a strategy you're still recommending to clients? And do you still have that S&P 500 end-year target of 3,500?
Yeah, 3,500 by the end of this year and 3,800 by the second half of next year. So I am fundamentally bullish because I think the fundamentals are going to continue to improve. We are seeing that earnings estimates are starting to pick up. They're kind of recovering, actually recovering remarkably quickly after a very short plunge. So I do think that as we look ahead here, we're going to see the economy performing better. Look, I realize the virus is still out there. There's still lots of people that are suffering as a result of it. Economically, at the very least. Say hi to Max, by the way, and Bailey. They just came to visit. They love it when I'm on CNBC. So look at the data we get today on existing home sales that you just reported. I think we're going to see that de-urbanization is going to provide a lot of stimulus through the housing market that will offset some of the ongoing weakness in some of the services area.